Hey everyone, Mortgage Nerd here, having a great interview today with Sandra Pariente, a realtor in Miami. Very happy to have her on our show here, and just gonna ask her some questions. And Sandra, thank you so much for coming on.
Thank you for having me.
Of course, of course. So I know you're French, as we might be able to tell with your accent. When
Yes.
did you first come to the U.S. and how has your European background helped you in the real estate business here?
So I got to the US in 2002, more or less. And immediately I tried to get into real estate because that's what I love to do. And I was doing it a little bit in Europe since I was 17. You know, in Miami, my European background has not really influenced my clients. I received a lot of American clients, a lot of Latin American clients, but of course everybody loves a European accent, so in that way it helped a little bit.
Awesome. And do you get a lot of clients from Europe or from France, or just mostly local?
Mostly local.
Okay.
A few French clients, because they are referrals or friends, but mostly locals and American and New Yorkers, Chicago, California.
Do you work a lot with Haitians? I always struggle when we have someone that's only Creole speaking. Haitian, I speak Spanish and I can do, the Spanish speaking community, but do you ever get any Haitians?
No, I never have. No, not yet.
I think they, for the most part, they might stick more to other Haitians. I've had Haitian friends that are in the mortgage business that do a lot of business within their community. So you've been in the real estate business, it seems, for about 20 years now. What inspired you to get into real estate in the first place? I know you said you were doing it in France, but
I always had a passion for real estate. I was always, amazed at the architecture. When I got to Miami, for me, everything was new. In France, we don't have all the buildings on the ocean. We don't see that. So for me, it was always an industry that I dreamt of getting into. And luckily, I one day I decided to work for a developer, to do pre-construction sales and to get into development. At that time, it was difficult because you need to have experience, you need to know someone, or you need to get in. So luckily, I was able to get in. I kind of pushed myself in a little bit, but I got in. So that's how I started my real estate career. So I was very lucky to be with high-end developments on the ocean, in Miami Beach, in Sunny Isles. And that's how I built all my relationships with all of my current clients from that. So.
Gotcha. So is that your focus more than anything, the high-rise, oceanfront, or down? Is it downtown or Aventura, Sunny Isles? What area do you focus on?
Anywhere between Aventura to downtown Brickell. Yes, but mostly I work a lot in Sunny Isle, Edgewater, Brickell, Miami Beach. That's really my area, and most of them are condos.
Okay. You do single family homes as well?
I do single family homes. Single family homes are definitely a local buyer, more than an investor type or second home. But yes, I do single family homes.
So what do you do when you have someone that's outside of your area? Do you refer them out, or what do you typically do in that case?
Yeah, if I have someone that is asking me for an area that I really don't know anything about, I will probably refer them. If not, I try to do it. I try to do as much as I can myself. But if someone is asking me for, West Palm Beach or Boca or something that I'm not really familiar with, I will refer them.
Okay. So we've been in the business about the same amount of time. So we both lived through the 2008 market crash. And so what was it like for you and your business, and how does that compare to what we're experiencing today in this market?
Okay, so when in 2007-8, I was working for a developer that went bankrupt. So I was on a project that basically defaulted. It was a pre-construction project, and we had to refund all the deposits to the buyers. So it was, for me, it was the first time that I experienced anything like it, because I didn't, it was my first down cycle. But it was good because the developer went bankrupt. Okay, so I was left without my job, but then I jumped on another project in Miami Beach that was just taken over by the bank. And this was great because the prices were really good and opportunities, the investors saw the opportunities, because investors that are used to the cycles, they knew that the time to buy was now. For example, in 2011-12, I was selling a project on the ocean that was taken over by Lehman Brothers. At the time, it was called Canyon Ranch in Miami Beach. So we sold, we sold 600 units in maybe like a year and a half. So it was very good. It was very good. So for the economy, I understand it was not good because you had all the foreclosures and people not able to pay their high interest rate mortgage anymore, or the variable rate, that issue with mortgages. But for us in real estate, it was opportunities, a lot of opportunities.
Yeah, it's interesting talking to different people about this. And I remember back then, a lot of people that were succeeding also were doing the REOs, the foreclosures, even people doing BPOs, realtors doing whatever they could to get something in. For us, in our business, while other people were getting out of the mortgage business altogether, we were succeeding with reverse mortgages because there was a demand for that, even though the values were going down. So it was tough to get them done. But if you don't shift in those types of markets, or even in this type of market, then sometimes you might end up out of the business or not doing well, unfortunately.
Yeah.
So it's good to see that within the condo, because I know condos got hit hard, that you found that shift within the condo market and were able to do well.
Yeah, no, and I think that people also got educated as far as mortgages and how does it work. I think a lot of people didn't understand what they were getting into. They would buy a condo with only 10% down. They would sign a mortgage that they didn't understand what adjustable rate means, and I think that nowadays, that's why it's much more strict to finance and to buy a condo. Now you need 20%. With pre-construction, you need 30, 40, 50% down. It's not so easy, people don't get into a mortgage so easily nowadays. But it's better for everybody.
Absolutely. I explain that all the time, especially when people complain to me while they're in the process. They're like, oh my God, this is terrible. And what I say is, well, this is why we are not going to have a market crash again. Usually they're like, okay, it still sucks. I don't like going through it. I'm like, I get it. But I go through this with every client, unfortunately, but fortunately, because those pick a pay adjustable rates that existed, I started in 2005. And so the company I started working for were very unscrupulous. I learned the wrong way of doing things in the beginning, but I was questioning, I'm like, okay, this mortgage doesn't make sense to me. Explain it to me again. And the owner of the company was like, don't worry about it. Just tell them it's good for them and go. And what? I'm like, how is this going? It's not adding up. And it's because it was negatively amortizing. What they weren't paying was adding on, and they wouldn't tell me that it was a negative amortize. They're just like, don't worry about it. Yeah. So
I think a lot of buyers didn't really realize what they were signing. So today, in a way, the rates, they look much more different. It's a higher rate. It's a higher down payment. They make it very difficult, with the appraisals and everything. So I think that now the buyers are more aware of what it means to finance, and it's better, it's more stable. That most likely they're not going to end up in a foreclosure because they already have a high down payment, they are well qualified. It's better,
What's interesting, something I learned recently also, is that in the US, we learned that lesson and we did fixed rates for everybody. But in Europe, a lot of places in Europe still have adjustable rate mortgages. So when they financed 3-4 years ago, those adjustable rates are coming due. They're gonna go from their fixed period to their adjustable period, and they're all gonna go up because their central banks have higher rates also. And so
Yeah.
they're talking about potential crises in England, and I know in for the Netherlands, and I can't
Mhm.
remember where else I had read about it. Um, so
Yeah.
I'm glad we changed and are
Yeah.
doing it right finally.
Yeah. No, of course, of course.
So for a lot of people, the real estate and mortgage market in particular has been a challenging one in our business in 2022 and 2023. Well, mortgage rates finally seem to be beginning their decline. What do you see for real estate in 2024 and 2025 as we enter a more stable real estate environment?
Um, I, I agree. I think we will enter a more stable environment. I think that as soon as buyers are going to see that the rates are more stable or going down even a little bit, they will start, they will start buying again. I always say you cannot have both. You cannot have the low rate and the low price. So I think that if the rates are lower, the demand is higher, maybe prices will get a little bit stronger. Whereas today, you have more negotiation room, but then you're paying a higher rate. So, but I hope that the rates go down, because I feel like this year, a lot of buyers are just on hold because they're waiting. They're waiting. They say, oh, maybe I can get to a 6% loan. Maybe I can get under 5 again. And this has been a little bit difficult this year for us.
Yeah. Yeah, and I've seen a lot of people. It's that sentiment where, as rates are going up, they hold back. Even when rates were going from 4 to 5, they were like, "Oh, maybe we shouldn't buy." Then 6 to 7 and 7 to 8, and then now that they're coming down, even if it's from 7 to 6, the people that wouldn't buy when it was going from 4 to 5 are now going to buy 7 to 6, just as the shift in sentiment as
They
rates are
feel
coming
maybe
down.
like it's a little bit better. And the advice that I give to my clients is, if you like a property, we can try to negotiate the price, get the best price we can. You get the loan at today's rate, and in a year, 2 years, you refinance. At least you locked a good price, because once the rate go back to 5, hopefully, I don't think the prices will be so low anymore.
Yep. Yep. Or what I talk about more when that happens is the demand. There's so much pent up demand. Just like during the lockdowns, as soon as the markets opened back up and people were able to go back out and look at homes, the pent up demand from those few months and seeing the rates come down, it went crazy.
Yeah.
And I remember last year in 2022 on social media, me posting things saying, when the rates come back down, the floodgates are going to open. And so many people were like, "You don't know what you're talking about. There's going to be a crash." And well, there's no crash.
No
And
crash.
so many people have been wanting to buy and can't buy, or were afraid to buy. And now when the rates come down to a more affordable place, there's going to be such an influx, which is unfortunate, because they should be buying now with a higher rate, like you said, and refinancing later, as opposed to doing it when everyone else is doing it, and then we're in bidding wars again.
Exactly. That's my opinion. I think that people should not wait. They should get the best price, because once the rate goes down, we are going to get back to people paying full price. So, you're not going to have such a negotiation that you have today, because the demand is going to be back. So, and now I see that there is some demand, but I feel like people are not pulling the trigger. They're waiting. They are just, I don't know, they are on hold. They are just not making the move.
I had a client who got into a contract, I want to say October, and then another one now in November, and he canceled both contracts. They were looking for any reason, as opposed to saying before getting into the contract, "No, this isn't good for us." They got in, and then they started looking for every reason to get out. Every house I've bought, there's a time where I get cold feet, where I'm like, "Oh, maybe I shouldn't, maybe I second doubt it." So it's normal. I try to tell my clients it's normal. It's okay to go through that. It's a big purchase, no matter what. But yeah,
Did they back
I
out
see
because of the rate, or did they back out for another reason?
they came up with a lot of reasons.
Okay.
Yeah, the property, and it can't be the rate, because we negotiated a 2-1 buy down, So we got the seller to put $10,000 towards buying down their rate.
Okay.
Me and the realtor put $4,000 each, $18,000 to buy their rate down from 7.25 to 5.25 for
Very
the
good.
first year, and 6.25 for the second year, and then it would go up to 7.25. But between now and then, in the next 2 years, they'll refinance to
Yeah.
something maybe in the fours. And yeah, so it wasn't the rate; it was just cold feet, unfortunately, because of the market, I think.
Yeah. No, but it's interesting. The rate buy down is also very interesting. It's a tool that we can use because people at the end of the day they feel that the rate is increasing their monthly payment, which it
Mhm.
is. So I think it's great to say, hey, we can save you 1% by doing that.
Well, thank you so much for taking the time to sit with me and talk a little bit more about you and the business. Hopefully, we can do it again sometime soon.
Yes, of course. Thank you so much for having me, and hopefully, to many more deals and to rates going down very soon.
Awesome. I agree. Thank you so much, Sandra.
Thank you. Bye.